Welcome to another very exciting session of healthcare entrepreneurship. So, today we are going to talk about where we left in the last class and go from there. Okay. So, let us get started. Every year the budget is passed for, let us say, the Indian economy, whether healthcare gets this much amount of budget, the defense gets this much amount of budget, and this happens at a country level for every other country, right. Then there are state level budgets, then there are specific department level budgets. Like for example, if I want to budget my project funds for a certain delivering a certain product, I want to look at how much money I want to put in consumables, how much into manpower, how much into equipments, this much for travel, this much for contingencies, right. Like these are typical budget heads when I'm looking at a project level budget head. So these are some of the budget heads you may be looking at if you're working on a project or a product, right. So budget has a lot to do with finance, fund, cash, expenses, savings, and you're basically counting several things in a points, right. So okay, so what are the key aspects of budgeting? You need to understand the role of budgets in overall organizations plans. So it's not like I just sit on a budget which is basically how my product is built or how am I going to make it look very nice or marketable. That's not the only aspect of the budget. As a budget, you have to look at the overall organizational goals. What is the goal of your company? There could be some budget for scale up. There could be a budget like where you want to invest a lot of money in the next 2 years to make this product popular not only in India but also abroad. You want to launch it in the US, let's say. So depending on the overall plans of your company, the budgets can drastically vary, right. Understand the importance of people in the budgeting process. This is also very important part. Understanding the importance of people. Are there people who are demanding a salary hike? Are there certain manpower you want to increase? Are there people you want to cut short of, like layoff maybe? So there are so many things which are part of your budget. As a startup, we have to be very stringent, right. We have to be very stingy in several aspects, that if I have hired a marketing person, I want to make sure all the sales and marketing is taken care by that person. If I have hired a technical engineer, maybe they can take care of all the tech aspects, or maybe 2 engineers, 1 software and 1 mechanical, right. So this depends like what exactly I want to do, but like as a startup, I want to squeeze the maximum out of every manpower which I have in my disposal, right, including myself, right. So understanding the importance of people in the budgeting process is very important. Third is I want to estimate sales. Budgeting has a lot to do with sales estimation as well. I want to look at that, what are my sales projections, what am I looking at from a sales standpoint, am I going to increase from the number of products from 500 to 5000 in the 2 years, then I want to factor in for the different materials and increase manpower, better equipments and things like that, right. Next is develop production and cost budgets. We had talked about production, and so we want to develop the overall production and the cost budgets. Estimate cash flows. What are the cash flows which we are looking at for the companies, right. Develop budgeted financial statements. These are very important for startups and companies. You want to have very clear budgets and kind of revisit them from a maybe quarterly basis or yearly basis, right. So you have quarterly financial statements or financial meetings for companies. Typically, if you are studying the market, maybe if you have ever looked at the share market and other places, you will see typically a company would come out with quarterly results, right. So what are those like? So based on this quarterly results, they are redefining their budgets and things like that, and also the public tends to know what they're earning and what they're putting in which heads, right. So then explain budgeting in merchandising and service organizations. Explain why ethical issues arise in budgeting. So these are several aspects of the budgeting which are very important, or also explanation of how to use sensitivity analysis to budget under uncertainty. Have you budgeted for some uncertainty, right. So let's say you have you're talking about this wearable product which you are trying to build, and your company is super enthusiastic that I want to build this nice wearable product for the head and kind of have some nice signaling and sort out some mental health issues and other details, like, or I have a wearable product for prosthesis, right, like, or some other aspects, and I feel like everything is going as per place and I have not budgeted an uncertainty. What is the uncertainty? All of a sudden the cost of sensors have gone up, right? Electronics have really gone up, the pricing has gone up all across the country and abroad, and I am not able to procure the same sensors which I was getting for 300 rupees, I am getting them for 3000 rupees, and this has happened to many of the automotive manufacturers. They have taken a dig, right? So if these kind of unforeseen cases happen, my budget will be totally shaken if I am not factored in for those, right? So I have to continuously observe what the market trends are and look at if anything may seem to change in 3 to 6 months, maybe I should factor in a little bit more cushion for that, right? So these are all aspects of budgeting, how I make sure that my company is financially well planned. So the first part is understanding the role of budgets in overall organization plans. So we focus on the planning purpose of the budgeting process. For our purposes here, a budget is simply the plan stated in financial terms of how the organization expects to carry out its activities and meet the financial goals established in the planning process. So what is done here is, typically a company or a startup starts with a financial plan that this is what I would like my company to do, maybe invest a lot on the equipment or slowly hire manpower over the next 5 years, or have the product launch in the sixth month when I want to run a huge marketing campaign. So all these plans should be in place somewhere in order to figure out the budget, and that will help you figure out the organizational goals also and the budget as a whole. So typically a master budget is developed and how it fits into the overall plan of achieving the organizational goals. Before we investigate the details of developing a master budget, we discuss the way in which strategic planning can increase competitiveness and affect global operations. So what this means is, instead of putting a price value to all the budget points, let us try to first of all understand what are my key financial plans, what is my organizational goal, what are the key financial plans. Let us say I want to grow my profit by 10x, then that can be a financial plan in the next 5 years. How to do that? I figure out all those budgeting details, right? Now when I put them in a budget, it makes sense and I have taken certain cushions into it, right? So the overall plan is very important, where a master budget is basically a part of an overall organizational plan for the next year, made up of 3 basic components: the organizational goals, the strategic long range profit plan, and the tactical short range profit plan. So when you are starting up, you also need to have a very clear plan of your finances, right? And you will see majority of the startups, like specifically what I had been seeing in India, they are failing because they are using up too much of their financial budgets. They are not planning their budgets correctly, and second is they are raising funding like anything, like everybody is kind of running behind the Series A, Series B, initial VC funding. Let me get the funding and everything is sorted. Typically we have to understand that at some point we need to be self-sustained, right? We cannot just chase 5 VC funding and think we are successful. A lot of the companies have done that, right? They have chased funding and then they have gone public, then dumped all the funding and done all kinds of things here and there, where there is a huge mess up of how the manpower is, like the company deliverables are not good and things like that, right? So the correct financial planning is very important. We should not be in a hurry that let me just draw 15 lakhs or 1 crore of funding and I should be good to go. Let me think about how to budget myself after 3 years. If you do that, you are most likely going to fail, because one day your financials will drain out and that day you will not have a plan in place and your company will just perish, right? So overall plan is very essential. Top managers typically establish broad objectives which serves as organizational goals that company employees work to achieve, right? So as an entrepreneur, you should have a very broad perspective. Where do I want to reach in 2 years, 6 months, 5 years? These goals should be concrete and very clear. Most of the startups fail is when the entrepreneur who are driving the company do not have a clear goal. they have started looking for shortcuts, or they have started looking for making some quick money and do not have a plan of action ready for the next 6 months, right. So, it is very important to have right managers who can manage people and delegate the task appropriately. It is important to detail the specific steps required to achieve the goals. These steps are expressed in strategic long range plan, right. So, this is very, very important. So, you have to align your employees and other activities along with this plan. The plan for the coming year, which is more specific than long range plan, is known as the master budget, also known as the static budget, the budget plan or the planning budget, right. So, typically these are some terms used in budgeting where you have a master budget, which is typically in a year what do you want to budget, how do you want to distribute your money, right, based on its usage. Budget can also have something where you have factored in a fundraising activity which you will do, and you think like if this fundraising happens right, then I am going to put this much amount of extra money in the marketing. Those all things can also be included in the budget. So, from an organizational individual interaction standpoint, developing the master budget is very, very important, where the organizational goals are met, the long range strategic plans are met, as well as the individual goals and values are also not compromised. All of these are properly tied together into this master budget. That is very, very important. So, all of a sudden if my company thinks that I am going to start laying off 5 people because they are not adding any value, and I am going to put all my budget into equipment, that's very hasty decision, right. You want to have a very clear plan on what all are the things like you want to do that specifically aligns with your goals for the 1 year or so forth, right. If you start laying off people all of a sudden, you will have a bad word of mouth, no good talents will come to your company, right. So, that will backfire. So, you have to typically have a very clear rationale on where my budget goes into. If something does not work out, how to go from there to the next step. So, coming to the organizational goals, it leads to strategic evaluation, like basically you need to evaluate every time and now whether you are kind of aligned towards that goal. Like for example, if you look at Facebook, one of the very old sayings and the representation of that is basically the focus is very, very clear on the customers, what they want to derive out of the customers and what value they are adding. So, whatever does not add value to their products and services specifically, they are going to completely not do those tasks. So, that is a very clear mandate from Facebook, right. That is why the company is so successful. So, that kind of a mandate usually vanishes, like with a lot of startups where we are really struggling to make our first like buck, where we have really sold a product or service like effectively. So, this organizational goals have to align with the long range strategic plan, where you have anticipated conditions for the budget period, and this all factors into your master budget. Then you have actual reported results for the period. So, you want to also validate and evaluate your budget every now and then, that 6 months before this was your planned condition, what have you achieved, right. At an individual level, you want to look at individual beliefs and expectations, right. Everybody expects something out of the company. It is not always the monetary expectation. It could be expectations like a balanced work environment, like somewhere they can really grow quickly or learn some new techniques, or they can use this as a stepping stone to get their next big job. So, there could be so many aspects, or they are looking to really build this product with a free hand. So, that kind of an evaluation also have to be placed in perspective, right. This all factors into the master budget, because if the employees are feeling that they are not evolving, they are like feeling very stagnant. You may have seen this very often, right, like with a lot of companies, you feel very stagnant. You have been working the same thing for the last 9 or 10 years, nothing has changed. So, you would not want to stay with that company, right. You would want to switch or go for something exciting. So, there needs to be some training programs, some extra like conferences and things like that, where companies are taking you to, let us say, Goa or Thailand and things like that, just to kind of encourage you or give some bonuses or prizes. So, that has to all come into that budget factoring. right. So, periodic performance evaluation is the aspect which factors into the budget. Human element in the budgeting is basically understanding the importance of people in the budgeting process, where you have organizational goals, you have individual goals, and then you have the goal congruence, right, goal consensus. So, perspective or participative budgeting is basically the use of input from lower and middle management employees, and also known as grassroots budgeting. So, these are several budgeting techniques in the market. If you take a course in finances marketing, like, you will probably learn all these techniques in quite a good bit of depth. But here I am trying to just give you an overview of what needs to be in sync and what are the important things, right. So, the organizational goals and individual goals have to be factored in together into the budgeting. It should not be like just an higher management is deciding that these are my available money, this is how I want to place my budget, right. And this is a very common practice, right. Majority of the companies will never take the insights from the lower like management employees. This is what you want to do as a startup. You want to make sure because you are operating with a limited set of people, you want to make sure you can maximize your abilities to perform. You can only do that if you incentivize all your employees, right. They have incentives of either growth or monetary returns or things like that, Next is sales forecasting. So, while we do the budgeting, another very important aspect is you need to estimate the sales, because if you have not done this just yet after the customer discovery and you have launched in the market, there is a huge backlash which can happen. If you undersell, then also this can happen. If you oversell, that then also this can happen. So, let us say you have expected a sale of 1 lakh pieces of your product and only 30 people have taken your product, then you get into huge losses and you have to shut down your company. Let us say you have a expected number of products as like 1 lakh again, and all of a sudden you see a demand of 6 or 7 lakh and you are not able to meet this demand. So, what the market sees you as like not very capable to meet demands, so the company is not doing very well, again you fail, right. So, sales forecasting becomes really important. It is an art, it is something which comes with experience and with a lot of tactics and literature search, right. So, forecasting sales is the most difficult aspect of budgeting, because how do you start, where do you start, how do you know people are going to buy your product? And one of the important aspect of this is the customer discovery, where you try to understand that by surveying, let us say 100 people, are 60 of those like telling me that they will buy my product? Then I know I do have some target customers, maybe they are 60%, a little below, maybe 40%, right. So, how do we forecast sales? This depends a lot on the kind of sales stuff which you have for your company. Marketing research, like if you want to look at similar products, how they had been selling, market research, kind of looping around a lot of concepts which we have studied so far. There is a Delphi technique which I am not going to get into depth with, these are marketing techniques. Trend analysis, we want to look at trends, trends never lie. So, there are several trends which clearly indicate that people have a huge demand for this product and you do not have a huge demand for this product, right, like that is very clear. If we are not taking them into account, we cannot do the right sales forecasting. Econometric models, all right, there are a lot of econometric models which are there. So, how do we do this? After evaluating the sales forecast derived from the various sources, the budgeting task force, here is an example from these are known as Santiago Pants. Basically, this is a company, representative company, just take it as a dummy company. We are just going to focus on the values and the numbers here. So, the estimated sales here are for 1,60,000 with a price unit of $45 per unit. And so, the estimated total sales revenue is 720,000, basically 72 with a 72 lakh dollars, right, like that's the amount of dollars which you are looking at. So, this is a sales estimate which they have initially made, right. So, the next thing is we need to understand several terms. that develop production and cost budgets, like which is a production budget is a plan of resources needed to meet current sales demand and ensure that inventory levels are sufficient for future sales, right. Sometimes we have to have enough inventory. If we are in a implant manufacturing company, we need to make sure that there could be a high demand and we need to have stock in enough inventory. If you do not have that, then it is a problem, right. So, the basic inventory formula here is you have a beginning balance for the inventory, then you have transfers and then transfer out. These are basically when you have like components in different parts. Let us say you have a dental implant which is 4 parts, right. So, in this 4 parts you have a beginning balance of like you have hundreds of all these 4 parts. Now, you are making the first part first, second part second, third and fourth part maybe together, and then you are assembling them, right. So, here you have a beginning balance for each of these parts, then few of these parts after getting built are getting transferred to the second scale of things, which is like the third and fourth part when they are getting assembled, that is the transfer. So, the transfer in and transfer out, and then you have an ending balance based on how much are you left with, right. So, after a while what you will be left with is basically 3 and 4 steps, and the 1 and 2 would be gone because you have already used them while doing the 3 and 4, right. So, you have to have a clear inventory formula so that all your inventory aspects are taken care of, right. So, for inventories, production and sales, units in the beginning plus the required production minus the budgeted sales end up in the units in ending inventory. So, typically in a manufacturing kind of setting, you look at your starting inventory for the day, you look at your ending inventory for the day. Starting inventory plus whatever is the required production, what has happened over the day. Like let us say your starting inventory was 1000, you have now produced like 3000, so now you have 4000. Then the budgeted sales is like out of this 4000, you are going to probably end up selling 3000, so minus 3000. So, 1000 is again back in your ending inventory, right. So, that is how you need to plan your inventory, that I am able to sustain the inventory, it is not going down with time, then you are at a problem, right. All of a sudden the demand will come, you will not be able to meet it. Okay. So, the next is rearranging for required production. So, based on the budgeted sales and the units in the ending inventory minus the units in the beginning inventory, you have the required production. So, this is the same formula just kind of placed in different way, right, like the negative and positive have been moved around, right. So, this gives you the required production, what you need to do from a day to day basis, right. This is the amount of products or the number of products you need to produce, right. So, example here is the Santiago pants, like the sales budget is basically 1,60,000 units. The management estimates that there would be 5,000 units in the beginning inventory and 15,000 in the ending inventory, right. So, what is going on? You have initially 1,60,000 like units which are already there. Yeah. So, this is the budgeted sales, like what you really need and you have budgeted it right. Then you have units in the ending inventory which is 15,000, 5,000 with the starting inventory, right, and then finally required production is 1,70,000, right. So, if your budgeted sales is 1,60,000, you want to actually make sure you produce 1,70,000 in order to keep on sustaining. This is based on this formula they have shown, right. So, this is the these are the numbers you are looking at. Expected sales, this is just a different way of placing it. So, for the budget year ending December 31, you know, like, so this is the production budget of Santiago pants. This is just an example where the estimated sales is 1,60,000, add desired ending inventory, this is 15,000. So, total needs are 1,75,000 less beginning inventory which you had started. So, units to be produced is 1,70,000. Just this is how you make a detailed production budget in the Excel. Then you have several parts or components which comes into your production cost. Typically the direct materials which form the part of your products, they contribute to the direct material cost. Then you have direct labor who are working with these materials, they come into the direct labor cost. Then you have the manufacturing overhead where you have indirect labors, like people who are shipping or taking things from one place to another, they are not the direct laborers who are working with the material, but they are indirect laborers. Indirect materials, so you have this nice product, medical product or some product which you are working on, you have forgotten about the screws and the nuts and bolts, right. This is what we typically forget about. So, this is what comes under the manufacturing overhead, indirect materials. And the third one is water, power, space, like several other aspects, like if somebody needs to travel, that amount of money for the transport and things like that. These all add into the production cost, and we have talked about this at length before, right. So, a direct material example is you have this is an estimated production data from the material data thing. This is typically a data sheet in which you have the different aspects of the production budget, and you will find a lot of these templates available online. You can download them and just look through it, and you will see production budget, cost sheet, what is the cost of materials, cost of manpower, which is kind of segregated and things like that, right. So, basically what this company is trying to produce is they are trying to produce this fine cotton from or have two types of cottons which are typically available for building the products. One is cotton and second is fine cotton. So, you have 3 yards of cotton and 0.2 yards of fine cotton. The beginning inventory is 10,000 yards and the beginning inventory for the fine cotton is 1000 yards, ending inventory is 15,000 and the ending inventory for the fine cotton is 1000, right. So, the cost of this per piece most likely is, or per yard, is $3 for the cotton and the fine cotton is $5, right. So, this kind of breakdown cost for every product or every little component needs to be there. So, let us say I want to build this particular implant where I want this titanium alloy in this certain kilograms, and typically what I am using for it is like, let us say 50 grams, right, for the entire alloy manufacturing. So, this is the amount of 50 grams if I am looking at the different versions of titanium alloy, and maybe I have two options in the market. I want to look at the prices for both of them per product piece, right, not as a whole. So, I want to look at for building one product, like how much of this material would it cost, right. So, that is the example of a material cost. I want to break down the entire cost into this per piece material cost. Next is, so this is again back in the Santiago pants, like where they are trying to use this cotton and fine cotton. So, typically the yards needed, yard is basically this kind of area or the amount of material which is required. So, 1,70,000 times 3 times, like plus 15,000 is the starting inventory, 10,000 ending inventory. Sorry, 15 is the ending and this 10,000 is the starting inventory. So, typically you have 5,15,000 yards which can be covered, or which is the amount of material which is needed. For the fine cotton, to have certain amount of production and financial planning, you need 3,400 yards, 1000 yards only to get going, right. So, this is an example where you dig into the material and find out not only the pricing, but what are the amount of requirements which you need, right. This is a much more detailed material budget sheet where you have a very fine calculation on direct material needed per unit. So, per unit need is 3 yard, per unit needed of fine cotton is 0.2 yards. So, total cost of material which you need for so many 1,70,000 is that much amount of money. So, this is just very similar to products or implants which you want to build, where basically you need 2 or 3 different materials, they have different costing. You need a certain amount of the first material, certain amount of second and certain amount of the third. So, you basically factor them in and add them up to look at the overall cost of one single piece, and then multiply it with the amount of demand which you have or the budgeted estimate, like you need, let us say 10,000 of these in a daily basis. So, you multiply it with that, that is your overall cost. of manufacturing, of getting material, right. So, that is how you factor in the what is the cost of my material from a day to day basis or monthly basis or a yearly basis, right. So, all these things can be auto calculated within an Excel, right. So, that can be put in like as you could. Next is direct labor cost, right. So, all these costs have to be really closely looked into. So, the direct labor budget is units to be produced is so units of the pants basically, which very similar to the medical products. It's 1,70,000 is what you need to produce. Direct labor time per unit is half an hour, right. Total direct labor hours needed is basically these many amount of pants times half an hour per pant. Maybe for stitching there are so many things. So, for an implant maybe the different manufacturing steps. So, what is the total number of direct labor hours which are needed? 85,000 based on half an hour per item. So, what is the direct labor cost per hour which you are trying to provide to your so this is a cost which is typically set by the company's management. So, let us say you are trying to provide $22 per hour kind of cost. These costs are fairly high in the US and several other settings, maybe much more lower in India, right. So, you'll but the crux is very straightforward, it is you are trying to just look at the direct labor cost, and this may also vary from one labor category to another, right. So, this is the cost, these are the total number of hours. So, the total direct labor cost is the total number of hours times the hourly cost, straightforward, right. So, this is around you are looking at 18,70,000 US dollars in this particular case, and this will factor in accordingly like for your product, right. So, this is the direct labor cost example. Overhead example, right. For the budget year ending December 31, variable overheads are needed to produce this 1,70,000 units, such as the indirect materials and supplies. These are typically at a rate of $0.3 per unit. So, you are looking at a total cost 1,70,000 multiplied by 0.3 gives you like around 51,000. For the material handling cost, these are all the indirect cost, if you remember, is around $0.4 per unit, right. So, you are looking at a $68,000 cost for the total perceived or the total budgeted units which you want. The other indirect labor is around 0.1 per dollars per unit. So, $70,000 is the total cost, right. So, the total variable overhead is about $1,36,000, right. So, typically you would see when you are trying to manufacturing, the cost would just fly off the roof, like it will just keep on going up when you keep on adding all these details. This is a kind of budgeting we have done for OneSoles also. When we wanted the insoles to be manufactured, we had to develop these budgeting as a part of our business model, a business plan basically. And we presented this to a lot of these venture capitalists to showcase that where are our costs getting incurred, and based on that they can put a value on the company or value on the product, right. Now they can probably say, let us say I need 10 lakh of rupees. Now they can say, okay, I will give you 20 lakhs, you give me this 5% stake or something like that, and I will take care of all your requirement for the budget, right. So, this is typically how a fundraising agency or venture capitalist would typically deal with you. If you have been observing Shark Tank, you know, like in India or abroad, like that is a very similar budgeting technique which typically goes in their mind. They want to look at your budgeting techniques first, right. Okay. So, fixed manufacturing overhead here include, so there are some variable costs like materials, material handling. This depends on the labor availability and how much scaling you are trying to do for your product, but there are some fixed manufacturing overheads like supervisory labor, people in the higher management whom you cannot really get rid of, right. So, many of the like labors you may cut down, like so you have 100 labors for building, let us say 200 parts, you may cut it down to 50 labors for 100 parts, right. Those things are variable, or at a certain point you feel like your labors can be trained and you can cut down the entire population by 50%. but you do not want to replace a supervisor who has a lot of experience. He or she would try to manage these entire set of people in a much more effective way, and that is one of the key reason. Once you go up the management, the salary goes up, because the value of that particular person for the company is really increasing, right. So, that is the rationale for increasing value and the salary and the price. So, maintenance and repairs is another aspect in the basically the fixed manufacturing overhead, like where there are certain maintenance and repair costs or insurance costs which are to be paid. Plant administration, like plant operation, utilities, there are certain depreciating assets which you have to be mindful of, insurance, property taxes, and several other state and local taxes. So, that is the total manufacturing overhead, which may become a fixed cost, which is fairly high, right, which is kind of factored into your budget from a day to day basis and does not require too much of recalculation. Oops. There is some, okay, all right. So, next is cost of goods sold examples, right. So, when you have a work in process like an inventory, you look at the beginning inventory, what is the cost of that, what are the purchases which were made, and the materials available for manufacturing, right. So, you also look at the ending inventory, then you add up all this direct labor cost, manufacturing overhead, total manufacturing, and this and that. So, all put together, this is the cost of goods which are sold. So, what is the cost of goods which is sold? This is all your costs from the company which are mandatory, which you have to bear, right. So, in this particular case, this is 39,95,000 US dollars. This is for Santiago pants, like this is for this particular example. They would need this much amount of cost or this much amount of money. This is what they ask for from the VCs, or showcase this to the VC, that this is my cost of manufacturing or cost of producing. This is not what kind of like highlights what you demand from the customers. This is just the cost of your production and manufacturing as a whole, right. Okay. Next is the marketing and administrative budget example, where you are looking at several costs like variable marketing costs, sales commissions, other marketing. Several places in India you may have to, like to get into certain forms of like sales channels, you might have to give them certain commissions and sales salaries which are highly variable. You will have certain people perform exceptionally well in the sales, you may want to give them bonuses and things like that. Advertising campaigns, right, total fixed market cost, administrative salaries, legal and accounting stuff. Many of the times you will get into legal issues, maybe the land where you have built the space is somehow faulty, you have taken some extra land and there is some legal lawsuit going against your company. Can you stop producing and just keep worrying about that legal lawsuit? Probably not, you have to budget it in. So, when you become from a startup to a bigger company, this legal cases and other things will keep on happening, right. So, that you have to factor into your budget. This may seem very scary to look at when you are starting off, but once you have become a bigger company, these are normal day to day issues, right. Next is data professional, data processing services, depreciating assets like building, furniture and equipments. Equipments will go bad after a few years, it could be 5-year, 10-year or 20-year. After that, these are depreciating assets, they will probably have to be thrown out or written off, or you probably need to sell them for a fraction of a cost and you have to buy new equipments. So, you have to think that through, like in your budgets. If there is a piece of equipment which may go bad in a year or two, you probably have to think out very hard that after 2 years I probably need this much amount of funds to repurchase my equipments, right. Taxes, you have to pay a lot of income taxes, you cannot just miss out on the taxes which you have to pay to the state authorities, to the country for different licenses which you need and things like that. So, all of these things have to be factored into your marketing and administrative budget. Next is there are revenues and budgeted price per unit, sales volumes and things like that. cost of goods sold, marketing and administrative costs, these are added. So typically what happens is, like, you have several costs which are added, several costs which are subtracted, and you finally find budgeted profit after tax, right. So if you look at a financial statement of a company quarterly, you will see things like profit after tax, profit before tax, so there are several revenue before calculating profits, the total revenue, revenue before tax, revenue after tax, these kind of things. So budgeted profit after tax, this is budgeted, what you have planned for, it does not mean this is what you are going to get, right. So this is $11,49,000 is the budgeted profit after taxes. Typically you would want to know after taxes only, right. The fifth part is, after going through such a detailed budgeting, you want to look at the estimated cash flows. The cash budget is a statement of cash on hand at the start of the budget period, expected cash receipts, expected cash disbursements, and the resulting cash balance at the end of the budget period. So let us say I am looking at a fiscal year, like 2023, I want to look at what am I starting with from a budget standpoint, right. So let us say I have $100,000 like currently with my company. I want to do certain activities and want to make sure there are further cash flows rather than digging into this $100,000. I want to keep on building, right. And I know that these are some of the receipts which you have, like basically you have consulted for a company, or let us say you have sold certain products which you have not received the money for. So most likely you are going to receive the money in August, right. In August you are going to get another $50,000 or some 1000 rupees and things like that from different sources, and this is how you look at the cash flows. So the cash receipts can include collection of accounts receivables, cash sales, so there are several sales which are made out of cash, and when you say cash, you are basically talking about the taxed cash, right, like not like cash. So the sales of assets, so in many years it could be that you are trying to sell a particular part of your building because it is underutilized, right, then you are going to recover a lot of money out of that building. So that is something you want to also think about. Borrowing, issuing of stock, sometimes the stocks you want to sell, right, stocks of your company in the public market, and you want to gain some money from there. So there are so many aspects which decides what is the cash budget for the year. Further, some cash disbursements, like which you may have, like where the cash is not coming into your company but going out, also becomes an important part of your budget, is material purchases. You may require a lot of materials after the 6 months. Manufacturing costs, operating activities, debt repayment, maybe you have taken a loan 5 years back for the land, now you need to all of a sudden pay that loan, right, after 2 years due to some changes. So you want to factor that into your budget. Acquisition of new assets, let us say you want to get a very experienced person from the market who can take your sales to a different level. So that is an asset, right. Another asset could be you want to get a very high grade robotic equipment for your surgical instruments, right. So this is acquisition of new assets, you have to also factor into your budget. Income taxes, all of a sudden you are closer to July or August and you have to pay your income taxes, you are not factored that in, then you have to pay a lot of money out. Dividends, lot of things might come back. Other activities, let us say you organize a picnic or you are organizing some nice fundraising activities or events and things like that, you have to factor those in, right, or a conference. So this is an example where collection of accounts, direct collection of employee loans, direct labors, dividends, reduction in long term debt, all these things are very in detailed kind of written down in the budget sheet or the cash budgets, and finally it is being calculated. These are some examples to just look into. Monthly collection experience, where you have sales on credit, basically cash collected from current monthly sales, cash collected from last month's sales, cash discounts taken, total disposition, what are the January sales, February sales. So all this detailed setting has to be put. Does this need a lot of financial knowledge? Probably not. Like these are things we have to start thinking of from an entrepreneurial standpoint. This is another example where you have to look at the different month wise sales and look at the total collections in each of this months, total sales, and maybe you can kind of have some projections based on that, right, multi-period cash collections. Some of the sales along with the disbursements have to be compared to look at whether your company can take certain decisions which can be taken at that point or have to be delayed, right. So, if your cash collection versus the disbursements are almost in the break even or disbursements are higher, you may want to focus on your company first before giving out a yearly bonus. So, many of you you had been working on a company and all of a sudden there is this hearsay that this year the bonus is very less, right. So, why is that the case? Because somehow the company is not able to manage its finances very well. So, this year they are not able to give a lot of bonus. Their focus is on just making sure their profit levels are intact and the company operation is intact, and next year they make a lot of sales, they hike the bonus, right. So, this is another example of the different purchases, just the detailed sheets and like how they are done quarterly. This is the quarterly cash disbursement, quarterly purchases, like like based on this the cash disbursement was done. So, if you look at any of the financial sheets of a company, you will see all of these. And by the way, let me remind you, these are not specifically for bigger companies. If you are registering a startup, you need to get all this financial accounting done either through a chartered accountant or by somebody in the company, and you need to submit this to the government, right, to make sure these are your sales and you're paying the right taxes and things like that. Checks and balances have to be very clear. So, some idea into the budget is very important, right. This is another example where they are looking at long term assets, the cash. This is what you will typically find in the financial sheets. Some more examples very quickly: taxes payable, accounts payable, short term liabilities, long term liabilities, shareholders equity. So, let us say you are a public company, you have moved from startup to a public entity and lot of your money is in the form of equity, right, where there are thousands of shareholders, big sharks, small sharks, and like retail investors who have invested money in your company, they are holding stocks, right. So, what is that shareholders equity? That is something also to be factored in. So, sometimes when you are running in debt, you want to probably sell a few stocks or things like that and take that money back from the market, and operations like that can be factored in. So, when you are thinking of budgeting, you are thinking of about shareholders equity as well. Retained earnings, common stocks, like then you have several bonds and other options which are there. So, typically assembling the master budget for a manufacturing firm requires a sales forecast where you have a production budget and then you have a marketing and administrative cost budget. Under the production budget comes the required direct and indirect cost of different aspects, budgeted cost of goods sold, budgeted income statement. These are all kind of coming together from the production and the marketing budget. Then you finally built up on something which is known as cash budget, and then you have the budgeted balance sheets. These balance sheets are what are very important in terms of your company. Seventh is explain the budget in merchandising and service organizations. You need to do the sales forecast, budgeted cost of services, budgeted income statement, marketing and administrative cost budget will also come in. Finally, you do the cash budget and the budgeted balance sheet. So, irrespective of whether you are driving a product or a service based companies, you are supposed to do all this due diligence steps of budgeting very clearly, and you have already seen how multifaceted and complex these systems are. You need to factor in every small little detail and cannot miss out on those, right. Then again, this is for wholesale organizations, retail and wholesale organizations, same process, right. Only the name of the company or the purpose of the company has changed, but the same process line has to be followed. So, this is very important. You have to take care of what is your sales forecast, what is your budget. This have to be all factored in, and that will decide your budgeted balance sheets. This is another example where there is an estimated sales, estimated ending inventory, beginning inventory and cost per unit, which is done for wholesale organizations for some video sales like which this company is trying to do. This is again the total cost of merchandise taken through different stages of budgeting. This is something very important, ethical problems in budgeting. Explain why ethical issues arrive in budgeting. This is something very important for a company. Budgets can create some serious ethical issues from many people, right? Specifically, if you are looking at the sales of several companies, they have certain sales targets, and many a times, like many of the company employees and people are doing unethical activities to chase certain sales numbers, like they will have some friends and families invest to it, or give their sales targets to somebody else, or somehow meet the sales target through unfair means. So this is something we have to account in, like while budgeting. Do not set targets for certain aspects of the budget which are unrealistic, right? The company must recognize the trade-off between encouraging unbiased reporting by managers and the use of budget information in performance evaluation. If you always put a tag that if you have made 100,000 rupees profit or 2 crore profit, then only you will get a promotion or salary hike, then people will start doing unfair activities, unethical activities, right? So during the budgeting, you have to make sure that you have realistic targets. What happens if they are not met? What happens if they are overachieved? That is to be very clearly clarified with the employees. Otherwise, you will see a lot of inbreed of unethical activities, and which will finally lead to a bad image of your company, and things can backfire in different forms and shapes, right? So this is another important aspect of budgeting which is usually missed out. We always want to chase budget and think about, oh, this employee needs to perform this much time, but we are not robots. We have to think realistic also, right? So that realistic budgeting and a backup plan is very, very important. Ninth is explaining how the use of sensitivity analysis to budget under uncertainty. Budgets allow management to explore many alternatives, like spreadsheets are helpful in preparing budgets and quantifying what if conditions. So you need to put certain what if condition. What happens if the land cost all of a sudden goes up? Will it really affect your budget or your entire company operations? Or the cost of, let's say, parts or certain raw materials goes up, or certain digital platforms the prices have gone up. Earlier you were, for hosting a server you needed like 500 rupees, now you want to put 1000 rupees. What happens in that case, right? So you need to make, so this is a example of that. San Diego Pants, what it has done is for $40, $45 and $50. These are the three case scenarios of the pant pricing. What quantity of sales is the same, how much would be the revenue, how much would be the operating profit. So these are the different scenarios. What if you had to change the price of your product to $40 instead of 45, or you could increase the price? Then what if scenarios can be targeted with different forms of budgeting. Accordingly, you can change the budgets of different segments, or understand what could be the overall effect of a slight change in the product pricing into your entire budgeting, right? So with that, hopefully we have gotten a good bit of understanding into the different pricing tactics, pricing models, as well as how to budget for your company. So I would like to thank you, and just stay tuned for the next upcoming lectures on the sales and marketing, and we will get more into the depth into the commercialization aspect. So thank you.